everybody? This is Top Growth Financial, and we got another top 3 stock picks for you this week. We're super excited about them because we think they're going to make you guys a lot of money, and these are going to be Skyworks, Baidu, and DraftKings. And we're going to start with Skyworks. So Skyworks is a chip manufacturer, and they mainly supply Apple for all their products, and they're working very intently on making better, more sophisticated products for 5G smartphones. And as those emerge into the market, you're going to be seeing a lot of revenue growth for Skyworks. And also, when Apple does good, Skyworks is going to do good, because Apple and Skyworks kind of correlate directly together, because the more phones Apple sells, the more chips they need. And then Skyworks is going to make more revenue off selling those chips to Apple. So it's important that Apple does good, but they've been solidified as a great company for a while, and Skyworks is their chip manufacturer. So that, in our opinion, is the biggest factor for Skyworks' growth. And now we're going to take you through the chart for Skyworks. Okay, so as you see in the chart, they got all the way up to $199.66, and that's on the year, which got them all the way up to a 57% gain. And that's really good, but right now they're a little back down, but that's actually a better thing for you guys and us, because that's a buying opportunity, with them being at $171.26. And the best thing about Skyworks is their numbers. Their technicals are great, and it's exactly in the ranges that we want them to be in, as we stated back in our older videos that you can go and check out. And we're just going to tell you exactly what those numbers are.
The first thing we always like to look at is the PE ratio, and that falls right in our range of 8 to 25, as we stated in our earlier videos. Right now, it's currently at 23. It's lower right now because, as Josh just showed you, they're in a little bit of a dip right now, which we see as the perfect buying opportunity because they're still a great company. They've fallen off a little bit, but we expect more growth in the future, so we see right now as the perfect buying opportunity. And next, looking at their return on capital, 32% currently right now from this past quarter, which is great. We said anything double digits or above, and this is way above that. Even looking at the last 5 years, their 5-year average is 26%. So they have been doing good for a while now. This just shows how well their company is ran. Being able to invest that money into their company and see that growth output of 26% over the last 5 years is amazing. Another thing we like to look at is their earnings per share. Currently, from this last quarter, it was 2.08, which is a great number, very profitable, and they've been profitable the last couple quarters. In fact, they've actually been steadily increasing their earnings per share for the last couple quarters. And lastly, what sets them apart from a lot of companies is their dividends that they pay out each quarter. Okay, so we pulled up their dividend payout history dating all the way back to 2015. And you can see at the bottom, back in 2015, they paid 26 cents per quarter. Now looking all the way up to last quarter, they're paying 50 cents a quarter. So they basically doubled their dividend payouts in the last 6 years. And if you look at it by quarter, you can see it's a consistent growth each year. The fact that they have shown consistent growth in their dividend payout tells us how confident they are in themselves as a company to be paying out those dividends each quarter. So now we're going to take a look at the tip ranks for Skyworks. So currently, Skyworks is at $171, but as you can see here, the average price target is $213.60, which will give us a 24.74% upside on the year. The highest price target is as high as $245, but take a look at the lowest price target, $182, which is still higher than what we're at right now at $171. So even the analyst with the lowest price target still has Skyworks being profitable within the next year. Looking over to the left, you can see it has a moderate buy with 11 buy ratings, 6 holds, and 0 sell ratings. So basically everything we've seen from Skyworks is exactly what we're looking for in terms of the numbers. Everything's within our range. The company is well ran. We love what they're doing. And we really think it's going to make you guys a lot of money in the next couple of years.
So our next stock pick is going to be Baidu, and this is basically a search engine turned tech company, sort of like Google, but in China. So maybe you've never heard of it before, but in China, that's all they use. Google's actually banned in China, so they can't use Google, they need to use Baidu. And it started as a search engine, like I said, but then they're moving into different sectors. They make most of their money through their pay-per-click advertising, and they're the biggest pay-per-click advertiser in China. So like everybody on that platform is seeing those ads, they're clicking on them, they're pulling in revenue from that. And another great selling point that Baidu has is that they have really good, strong ties with the Chinese government. And when you're in China, that plays a big role because, as you've seen with Alibaba, they can put restrictions on those companies and really kind of slow down their growth and their stock price. And we don't like to see that, but the thing is with Baidu is they have a really good connection with the Chinese government, and it's only getting better. So that's something that we love to see. And also, they're the only company that has their license to operate self-driving cars, and they actually have a bus that's been successful transferring people around their campus, which I think is super cool. And self-driving cars and AI and all that, it's all going to be a big part of the future, as you know, and they're the leader of it in China. So that is a big step for them. And Baidu, they sell at 14 times their earnings multiple, which when you compare that with Google, they sell at 24 times their earning multiple, and they're basically the same type of company. So you think that they would kind of match up, but Google's just a more popular company. Everybody knows Google, but not everybody knows Baidu, but they will. And we want you guys to get on this train early and invest with us in this company. We think it's going to really take off into the future, and we're excited to go over it with you guys. So now you can see their stock chart, and I just wanted to point out that this year they had a really big run up. I think people started to notice them a little bit. They went all the way up to $339.91, which was up 177.77% on the year. And that would have just been a ridiculous gain. They dropped down a little bit, but it just shows what they can do. And I actually think it's a perfect buying opportunity because it's going to get back up to a new high at some point. It kind of found its resistance level. It dropped down a little bit, but it's due for another breakthrough. It's at $184.80 right now. Still up 51% on the year, which is really good. And now I'm just going to talk a little bit more about their numbers.
Baidu currently has a PE ratio of 9, which is the perfect number that we're looking for. It's right within our range, but that low number tells us that Baidu is actually a very cheap stock right now. As we just saw in the chart, it really ramped up. It's fallen off since then, which means you gotta hop on that train right now because we don't know how much longer we'll have before it shoots back up again. The earnings per share right now are sitting at 1.3, which means they're profitable. They have been for the last couple quarters now. And the last thing we're gonna look at is their return on capital, which is currently 6%. I know it's a little bit out of our range. As we said, we like to see the double digits. It's still positive at least, and with everything else Baidu is doing with all their other numbers and everything else they're doing as a company, we both agree that we can kind of overlook that lower number just because everything else is so perfect. We're not going to see everything in our range for every stock. Not everything is going to be perfect, but everythand else we've seen within this company really leads us to believe that they're going to be very successful in the future.
So now I'm going to take you through the Baidu tip ranks. And it's rated at a strong buy with 16 buy ratings and 3 holds. So that just shows you that a lot of people think the same way that we do about this stock. And they're putting it at a 66.91% upside, which is just ridiculous compared to any other stock that we've really seen so far. And that upside will take us to 308.13, which is just amazing. And we even see over here on the left-hand side that it says the highest price target is $372, which is maybe a little high, but who knows? It could get there. If there's a stock market run-up, you never know what could happen. And even the lowest price target of $215 is still up $30 from where it's at right now. So you're still going to get a $30 gain on each share of this that you buy. So this stock is a little bit higher priced than some of the other stocks that we've recommended to you guys. But the thing that you can do is you can invest with fractional shares. As we pointed out in our beginner's guide to the stock market, you could buy as little as $1 of any company of your choosing. So this would be a perfect stock to get into. If you put in 10, 50, 100 bucks, you don't have to buy full shares, and you're still going to get that same percentage return that you would when you bought the full shares. So that's a really good feature that everybody really takes advantage of. And like we said, Robinhood's great because you can invest and there's no commission fees. So now we're going to move on to our last stock, which is DraftKings.
So a lot of you have probably heard of DraftKings. It's an online betting industry. They're actually at the forefront of that industry. And we really like DraftKings because online betting is becoming legal in more and more states as we speak. Currently, New York is in the process of legalizing online betting. I know Ohio just started their legalization process. More and more states are jumping on this trend, and we think DraftKings is really going to take off because of this. DraftKings does have a couple of competitors, but they've been at the top of their industry for a while now. Just from seeing how well they ran, what they've done in the past, and what they're currently doing now, we don't really see that changing anytime soon. We think DraftKings is going to be at the top of that industry for a while. So with that said, we're going to go ahead and take a look at their chart now. Over the last year, we've seen a couple ups and downs, but overall, they've been kind of stagnant in growth when you look at the year as a whole. They're up $6, which is still a 14% return, which isn't bad at all. Back in March, their stock price was just over $70. There's been a pretty big dip since then, but you can see at the very end of the chart, it's starting to recover a little bit. We think we'll see a little more growth by the end of this year. But remember, like most of the stocks we recommend, this is more of a long-term investment. So in the next couple of years, we expect to see more and more growth. We think it'll be kind of a correlation between the stock price growth and the more and more states that legalize that online betting.
Okay, so right now their earnings, they're not exactly where we want them to be, not even close. This is more of a speculative investment, which we don't do much, but when you see the market kind of opening up and all the legalization that's happening with this online betting industry, we think this is going to be perfect, and we think it's going to really take off, that the earnings are going to be positive in the future. Right now, the earnings are negative $2.76 per share, which is not good. But despite those lack of earnings, they've had a huge revenue growth, and it's been steady. And we think it's just going to continue to increase the more and more that people legalize this, that cities legalize this. And Mitch mentioned earlier that New York was going to legalize it. And if you think about how many people are in New York that will be doing online betting, you could just see all that potential and how many more people are going to be using this DraftKings platform to have fun and do some online betting. Their PE ratio is also pretty bad. It's at negative 16, which I know that's not even close to where we want it to be. But with those negative earnings, you're going to have a negative PE ratio, especially when you have speculation in the market like DraftKings has, because people see where it's headed. People see that it's going to be one of the next big things. And we want you guys to be on that train with us and with them. So now I'm going to take you through the tip ranks for it. Right now it's sitting at a strong buy. And even with those bad numbers, you can see that 0 people are saying to sell it. 0 of the analysts. You have 4 holds, but then you have 16 buys. So most people really think that this is a good buy. And as you can see, there's people that are saying it's going to be at $105 by the end of the year. And that's pretty high. I wouldn't say that it's going to get that high, but I do agree with the $70 average price target with that 42% upside, which is still really good, and that's not even its all-time high. So I think it could even get a little bit above that. And worst comes to worst, lowest price target is $42.50, and you really didn't lose much if it hits that price. Of course, we don't think it's going to get there. We don't want it to get there, but if it does, then you didn't really lose that much. It's not a big hit. And remember, we're investing for the long term. We're not going to go for these quick gainers. We're going to try to make money in the long run. As we've said, like, we invest in companies that we think are going to do well over time. And this is one that we think no matter what, it's going to be higher than it is. And eventually we see it hitting that high price target of $105. It might not be this year, but in the future, once all the states legalize it, it's just going to take off. And it's just going to be a real moneymaker. We want you guys to get in on it.
So that's our top 3 stock picks for this week. We really believe there's a lot of money to be made with these ones. As you saw in the charts we showed earlier, all 3 of these stocks are actually currently in a dip right now. So we think this is the perfect buying opportunity for all of them. Thank you guys for watching this week's video. If you enjoyed it, we ask that you guys punch that like and subscribe button. Stay tuned for next week's 3 stock picks.